Welcome back. Today we'll be looking at UnitedHealth Group, which is down almost 25% in just the past few months. I've been interested in the company in the past because of the quantitative fundamental research that I've done, or the numbers, the financials. And this company is really a compounder, so we'll take a look at the financial metrics of this one. Then we'll look at the recent news about the Department of Justice, the DOJ, launching an investigation on UnitedHealth Group. And then we're going to watch this short CNBC video to get a feel for how Wall Street is approaching the situation. And lastly, I'll share what I'm planning on doing and if I personally think this is a buying opportunity. Let's jump in. So, as I mentioned, the stock is down a lot in the past few months. Since the highs of November 11th here, the stock is down just over 25%. And that caught my eye because I've been interested in the company in the past. And that's because this company is really a compounder. So after the recent move down, the company is honestly looking like a deal at just 15.84 PE and almost a 5% free cash flow yield. If we look at the revenue growth here, they put up steady, consistent 10% growth year over year. So very consistent. They're basically doubling the average revenue growth of the S&P 500, which is a characteristic I like in my companies. Now, if we look at the total number of people that UnitedHealth Group serves, the growth is slower, probably a little slower than I like. I like organic growth in my companies, but it's at least trending up over time. If we look at the earnings per share here, it pretty much follows the growth of revenue around 10% on average, which still good growth. But you'll notice this big decline in EPS here in Q1 2024, and we'll see the same thing in the free cash flow when we look at that later. But that was largely related to two different things. One, a cyber attack on Change Healthcare, which is a company that UnitedHealth Group owns, and that led to a hit in earnings because obviously they had to restore their platforms and increase medical care expenditures during that time period, and obviously they also lost revenue while their services were down. And two, from the sale of their Brazil operations, which pretty much resulted in a one-time charge of $7 billion due to foreign currency translation losses. So moving on to free cash flow. As you can see here, the overall trend is that free cash flow is growing with revenue and earnings. When I'm looking for these high-quality compounding companies, it's very important to me that they generate a ton of cash to either continue growing their business, raise their dividend, or buy back shares. And that's exactly what they're doing. If we look at the return of capital chart here, you'll see that they're returning so much money to shareholders. They're consistently returning, $10 billion plus to shareholders every single year. Specifically, their dividend here is growing steadily at low double digits every single year. And at current prices, their dividend yield is sitting at 1.75. But on top of that, as I mentioned, they're buying back shares and reducing the total number of shares outstanding over time. And if we go back here to the return of capital chart, you'll see that they're spending billions of dollars on buying back shares and returning value to shareholders that way. And obviously over time, this makes you a bigger percentage owner of the company. Now, here's something that I don't like: how fast their debt is outpacing their cash. You can see that the debt to cash ratio is growing over time. I like companies that are asset light with little to no debt on the balance sheet, but it's not a deal breaker. I do own Amazon after all. So overall, UnitedHealth Group has a lot of characteristics that I look for in high quality companies, and I think they will probably continue to compound for years to come. However, I do need to think about more than just the numbers, so let's get into that now. So that brings us to the news about the Department of Justice launching an investigation on UnitedHealth Group. And this Yahoo Finance article says that UnitedHealth Group had another rough day in trading Friday. Friday is when the report came out. Reports that the Department of Justice, the DOJ, is investigating its Medicare Advantage insurance business sent the stock more than 8% lower in early trading. The civil fraud investigation, first reported by the Wall Street Journal, examines how UnitedHealth records diagnoses that boost payments from the Centers for Medicare and Medicaid Services, CMS. CMS pays private insurers lump sums to provide alternate Medicare coverage. In a statement Friday, UnitedHealth called the report misinformation, and they said that The Wall Street Journal continues to report misinformation on the Medicare Advantage MA program. The government regularly reviews all MA plans to ensure compliance, and we consistently perform at the industry's highest levels on those reviews, the statement said. UnitedHealth added the company was not aware of any new activity by the DOJ. Friday's news marks the sixth time this year the stock has traded down and the second time this week. Earlier this week, the company reportedly offered buyouts to employees of its health insurance business, UnitedHealthcare, and considered layoffs if it didn't reach the target for buyouts. That's just the latest headwind the company has battled in the past 12 months. Last year, UnitedHealth was the target of a widespread cybersecurity attack that impacted more than 190 million, a number the company only revealed at the start of this year. The DOJ has been scrutinizing the company for a potential breakup, and the Federal Trade Commission could block its latest acquisition. In addition, the company suffered a tragedy in December with the shooting and death of its top insurance executive, Brian Thompson. The attack sent shockwaves through the industry amid a public backlash. The company's $460 billion market cap has been on the decline amid all these pressures, marking a significant shift in its growth prospects from previous years, when it was a favorite to become the first trillion-dollar healthcare company. So basically, they're being investigated for allegedly committing fraud against the government by reporting these false diagnoses to increase the amount of money that they're paid. If this is true, this could obviously result in some hefty fines and punishments and potentially further regulation down the road. However, the company is claiming that this is misinformation, which you would kind of expect them to do. They're obviously not going to come out and confess to this in public. We'll have to wait and see how this plays out, but currently I see this as a short-term issue. A lot of companies go through these periods of regulation, especially in this industry, and those fines are typically speed bumps. It's not going to cripple the company or mean that they're going to go out of business tomorrow. But it is important to remember that this isn't going to be the only legal issue that the company faces. When you're dealing with an entity that is so big and so powerful, every move, every deal and acquisition will be inspected. Okay, so let's move on to this CNBC video just to get a feel for how Wall Street is reacting to this news and what they're planning on doing.
Well, you're taking, some more healthcare positioning. You bought more UnitedHealth this morning, which is certainly the big stock story of the day. It's our chart of the day. As the Journal reports, the DOJ is investigating the company's Medicare billing practices. So I'd like to get your thought process on it and show you what the hedge fund manager Bill Ackman posted on X within the last few hours. Says, quote, "My psychological short here is paying off, and I would avoid this stock. When you find two cockroaches, it is almost a certainty that there will be many more. And a $500 billion market cap for a health insurer makes no sense." In the context.
So Bill Ackman is obviously someone I pay attention to. I think he's a great investor, so it's interesting to hear that there.
Of this story and all of the activity around this name over the last 3 or 4 months, you continue to buy more. Why?
Well, first of all, Bill's obviously a brilliant investor, but take that for what it's worth. It's worth a tweet that is reactionary, and if he truly had conviction, it wouldn't be a psychological short. It'd be a short in his books because he is a hedge fund.
No, but I know, but the point is, in fairness, though, before you say that, I mean, he has.
It's accurate.
He has. Well, no, not necessarily.
Why could he?
Well, because his strategy has evolved, and he has said that straight up that he doesn't short stocks.
I don't believe he should change his documents. He can say what he wants, but trust me, if something comes out that's
well, I mean, his actions speak louder than words. Hang on, Jenny. Go ahead.
But the point is that it's not necessarily true what he's saying. Now, why I did it?
Well, there's a lot of risk around this name.
I think you've taken out a lot of the risk right now, near term. Stock traded down over $60 earlier. I bought it down about, I guess about 55 or so. It's been a great trade so far.
That is a good point. As I said, at the current price, the valuation is looking very attractive.
Hurting from the position I had on, but this is a permanent compounder. This is the leading healthcare company in the world. That's why it's at $500 billion, number one. Number two, I mean, if you take a look at what's going on here, and just here's a 30-second summary. The government, Medicaid and Medicare, are pushing to value-based care. So that means they don't want to own the risk. So they're pushing that risk to practitioners. And they say the practitioners, and they figure it out with them, tell me what this patient will cost you to keep in good health. And that's going to drive better outcomes. It's been proven to do that in studies that have been done. And to the extent that you are right in how you're applying care and the medical loss ratio is lower, can't go below 75%, typically run mid-80s, you can keep the difference. To the extent it goes above that, 100%, then you pay that out of your pocket. So that's what's behind it. So you've incentivized docs to go ahead and operate this way. It's been a failed experiment with a lot, like Cano went out of business because of it. But the overall point here is that you've got this arms race in terms of coding, how you code these, and that's still very early days. So will there be offenses in coding? Yes. Do I think that this is an endemic issue that the board came out and said to the management team, find ways to rip off the government? Absolutely not. Are there bad players who are incentivized in terms of the individual practices that Optum owns? Sure. No different than what you'd see a regional manager in a bank, in an auto company, anywhere else. So to say this company is just evil to its core is really, really asinine. So that's my view.
All right. Here's a question.
Can I say one thing on it?
Real quick.
Okay. I want to get behind Bill's psychological short because that's where I sit too. You know, and I can't short and I don't run a hedge fund. But as I've mentioned before on UNH, I frequently inherit portfolios with a large, low-cost basis UNH position, and the first thing I do is cut it back. And that's been for years, because for years I've said, at some point this is going to come into the government's crosshairs. Everyone I know who uses it, like, hates UNH. Whether they should or shouldn't, they do. And it trades at too rich a multiple, I think, for what its future growth rates really are. It's an above-market multiple. It's decent growth, but it's not extraordinary. And I think it's always been in those crosshairs.
It's not above-market multiple anymore. Just factually, it's 15 times this year's earnings, which I would say is well below.
Okay,
exactly.
It's
very cheap.
Okay,
Yeah.
sorry on that one. Historically, it's been above market multiple.
Can I ask a question? Coca-Cola, their growth is very slow. Pepsi, they're very slow. You know, you take some of those other consumer companies, they trade at a multiple that's a premium to the market for perennially slow growth.
But I think you're talking about different things.
And they're not dominant as they were.
I think until RFK came in for HHS, I don't think that Coke and Pepsi have been in what I've seen for a long time as like right for government crosshairs of looking at the regulations.
That's why you don't invest in healthcare, because you don't know what you don't invest in any pocket of healthcare because of him and because of Trump.
I disagree with that completely. But
where are you safe investing?
It's been for years.
Where are you safe investing in healthcare? Where are you going?
Like Organon, okay, which is the spinoff from Merck, which is long legacy, what am I saying? Like off-patent drugs and like women's healthcare. Okay, you can be there. You got an 8% yield.
What if
it's trading at 3 times earnings?
And says we're 3 times earnings?
Okay, but like let's not go here now. I'm specifically telling you guys for years, every time I get a new portfolio and it has a big UNH position, one of the first things I do is cut it down to size.
I swear, every time this Steve Weiss guy is on, he just seems to be arguing with everyone. It's kind of funny.
Or sell it.
Okay,
that's all I'm saying. So all I'm saying is, I hear Bill's psychological
let me just
short.
ask a question. When you say you cut it back, is it because it's an oversized position in the portfolio?
Both.
Okay.
If it's super big and the capital gains are too big, then I cut it back. If I can punt the whole position, I've punted the whole position.
Why
you can
would
go back
you punt
for years.
The whole position, given what you think?
Why?
By the way,
because I've always thought that there's government risk in it, that there's political risk in that stock.
Okay.
So there are obviously some mixed emotions there, but I think that both sides bring up some valid points. But I wanted to remind you of something. Remember that UnitedHealth Group is the 7th most owned stock by super investors. And if you don't know what a super investor is, essentially they're institutional investors that manage over $100 million, and they're required to file this 13F form with the SEC every quarter, disclosing all of their stock holdings. But keep in mind that this is from the quarter that ended December 31st, 2024. So this data isn't exactly up to date at this point. But 17 super investors out of the 79, I believe, that are required to file currently hold this stock, making it the 7th most owned stock. And it was the 9th most bought stock during the last quarter. And if we look at the stock price here, these super investors thought that the company was worth a buy at these elevated prices. If we take a look here, it would be from September to late December, anywhere in this period, they were buying this company. So maybe they were buying the company during these highs here, or they managed to get in here at the lows. So what am I going to do? I'm honestly very torn right now. I'm not sure because the company has a lot of characteristics that I look for. It's really a compounder. Good revenue growth, good earnings growth, ton of free cash flow. They're returning value to shareholders. There's some slight things like heavy debt load that I don't quite like, but with their valuation, it's looking like a deal. In that video that we watched, I think both sides brought up some good points, like the regulation and the legal risks. Sure, but any big organization like this is going to face those issues. And, if we look at Meta, Google, MasterCard, Visa, they're just speed bumps. The companies get through those, either adjust or they get fined later, but they eventually make it through those. When I compare this company, I would probably compare it to a MasterCard, which is another compounder, 10 to 12% revenue growth, 10 to 15% earnings growth, ton of cash that they're generating and returning to shareholders. But one difference there is the total number of MasterCards or the growth of the total number of MasterCards is much higher. I think it's between like 7 or 8% versus the less than 1% total number of people that UnitedHealth Group is serving. So honestly, I'm not quite sure yet what I'm going to do with this one. You'll probably have to watch my Saturday videos, which is where I go over my portfolio and go over my buys to see if I personally buy this company. But let me know what you think in the comments below. That'll be it for this video. See you in the next one.